Boys and girls, earnings season is amongst us. I think the only big names that have come out and announced earnings this week were banks, of which I hold JP Morgan and Chase, and Netflix also came out this week. But Netflix flopped. They flopped big time. But JP Morgan did what they had to do and announced some nice statistics. However, we're not going to be talking about those today. Today, we're just going to be looking at the performance of my portfolio, my top winners and top losers, and just seeing overall how we've trended this week. I made my bi-weekly cycle of investments on Monday, which kind of explains this suspicious looking spike here, but that now results in my portfolio totaling £7,653, equating to a 6.8% increase. If we take a look at my pies, we can see that my dividends have gone up the most since I've started my pies, and my growth stocks have gone down the most since I've started my pies, which is kind of weird. I would have expected my risky part of my portfolio to go down the most, but it is what it is. I guess I just have more volatile stocks in my growth section, but yeah, I'll just be keeping an eye on that. But anyway, let's start by looking at my biggest loser this week, which was undoubtedly Boohoo.com. After they were found of practicing modern slavery in their Leicester workshop facility that I talked about in one of my previous episodes. So their share price has tanked 18.5% this week, which has stimulated action from the two founders of Boohoo to buy some of their shares back at the cost of £15 million at an average price of £2.14, which is just lower than what the price is right now. I don't think that Boohoo have actually come out to say anything yet, and they're being urged by MPs to come out with some comms or communications around the situation. I saw that they wrote the government a letter to ask them to take action around people exploiting workers by the means of introducing a licensing scheme to ensure textile factories are fit to trade, even though they fail to comply by these regulations themselves. Although we must know, I don't think it was actually Boohoo who underpaid their workers but one of their suppliers. However, I really do think it's up to Boohoo to understand who they do business with and how it's conducted, so I wouldn't really constitute that as a good enough excuse for them. But we'll wait and see if any more news comes out of this. It's been 2 weeks now, which is kind of a long period. I would have expected some more news to come out of this, but yeah, we'll just wait and see what happens there. Up next we have NIO. Actually, let me take my other two losers together. So along with NIO, we also have NIU, I think that's how you pronounce it, NIU Technologies. You've probably heard of NIO but not NIU, but NIU is another electrical automobile focused company that primarily develops electric scooters. Both of these stocks, as you can see here, NIO fell by 26%, NIU fell by 11%. They both fell quite significantly. If we start at taking a look at NIO, it seems as if analysts are looking at this stock as one that has shot up too much within a time period that was too short for them. Goldman Sachs cut its rating on NIO on Friday from a neutral to sell, but they kept their target of $7. At the moment it's trading at $11, so the combination of both these analytical propositions signals a further downside for the company. And I think this is why my shares in NIU also fell down, along with the majority of the EV market. The speculation causing the very quick uprise was humbled by analytical revisions. But overall, the EV industry is volatile anyway, so nobody should really be surprised by these rapid movements. Well, actually, the magnitude of the NIO fall was quite drastic. I mean, 26%, I'll give you that. But I think people would agree that the price fluctuations aren't as steady as, say, an Apple stock or Microsoft stock. I still believe in these companies, admittedly more in NIU than I do in NIO, so I'll continue putting money into them anyhow. Alright, let's get into the juicy bits now. So if we head over to our top winners this week, we will start off with GSK, GlaxoSmithKline. So if I'm not mistaken, the healthcare sector of the market did pretty well this week, with a few companies coming out with positive results surrounding vaccinations for the Roni. I saw that Moderna actually had a pretty good week, going up 50%, which is a pain in the ass because I sold my positions after reviewing the company and saw that they had decrease in earnings for the last 4 years. It would have been interesting to see if any of the big names in that company actually sell their shares now, because it's gone up over, I think, 500% in just a year. And obviously if that happens, then the stock will take a huge L. but I see some nice growth prospects for them. I just couldn't bear to hold on to them because of their decrease in earnings. But actually thinking about it, I probably could have put them in the risky part of my portfolio. Oh shit. But sorry, yeah, I've gone off track. Back to GSK. Yeah, so GSK, looks like their increase was around an independent panel to the US Food and Drug Administration. They voted in favor of approving their experimental treatment for a form of blood cancer. And I guess as it's a pharmaceutical company, it followed the general trend of the healthcare market this week. So all good news there. Cool, so up next we have the Galacticos, and simply for the reason that they've hired a new CEO who was a former Disney executive who has over 30 years of media and entertainment experience. We've seen this stock shoot up a delicious 25% this week. So what it looks like is that they've brought in this guy to improve customer experience, and at the end of the day, it is a company that's attempting to take ordinary people up to space. So I can see where the virtues complement each other there. So it's been a good week for Virgin Galactic. I do admit it's kind of a risky stock, which is why I put them in my risky part of my portfolio. But yeah, not much new news around Virgin Galactic this week. I guess the new acquisition of the CEO, the investors are seeing that as a good proposition to focus more on the customer side of the company. Okay, so coming on to my biggest mover this week, or my biggest winner this week I should say. I actually sold this stock a couple of weeks ago because I wanted to wait until Trading212 offered it as a fractional share. I wasn't too comfortable investing into one share at a time, but yeah, it also meant I can add it to my pie as well. But I got back into it this week, so I didn't really benefit from the huge gains it experienced, but I'm talking then none other than probably my most talked about stock on this channel, which is InMode. So InMode elevated itself 32% this week. Why? Because their management announced that its second quarter revenue would likely sit between $30.2 million and $30.6 million, which is significantly higher than the analyst outlook of $16.9 million. They've also increased their EPS outlook to between 0.2 and 0.22 cents, which again is higher than the industry forecast of a 0.09 loss per share. You heard that, loss per share. So from a negative to a positive EPS, that's big news. They're reporting their financial results on August the 5th, so my eyes and ears will be firmly peeled on that. So for all that's going on at the moment, those are promising signs and kind of shows how eager people are to get surgical procedures, which is interesting to say the least. So yeah, I'm happy to be owning this stock right now, and I'm extremely happy that it can be brought in fractionally, so I'll continue to buy this during my bi-weekly cycle. And on that, I'm going to end the video. Hopefully you found this video useful in some way or format, but until next time, I feel like I should have an outro or catchphrase there. Anyway, let me just get out. Yeah, bye.